Hello and welcome. Welcome, ladies and gentlemen. We are live and we're just waiting. We had a technical issue, but nevertheless, we have managed to get in on the live stream. Okay, so you are all welcome. Let's give it some time, all right? And we'll start right away. Beautiful, we're live, finally, we are live and I'm really excited now that we've fixed that. All right, guys, so today's stream is all about why you keep losing, as simple as that. If you're new here, please check out the description, check out the bio, go check out our community, join it, subscribe, follow, all right? We break down financial markets every day, news, analytics, trades. You know, we want you to understand how this industry works without any guesswork, all right? Bridging institutional side with retail. Now, with that being said, and without wasting any time, I want to draw your attention to something very important today. And we want to see how you should stop losing, or rather, why you keep losing. If you can hear me, if you can see me properly, please use the comment section, okay? And with that being said, I'm gonna start now. So listen up, guys. Beginner or even an advanced person, right? And you have developed a habit of losing, right? You get into this vicious cycle of getting into trades. Say you've deposited an amount of money, you've done the studying, right? You've watched all the videos, you've jumped from one community to the other, from one strategy to the other, you've read all the articles, maybe you've even bought a course, I don't know, right? And you're still losing. Now, not occasionally, you're always losing, consistently, and it's driving you insane, right? You've lost your relationships around, you're struggling financially, you want things instantly, like right now. And you feel you're doing everything right. And the market just keeps taking your money, right? That is what I'm going to talk about today. Today, I'm going to tell you exactly why that's happening. And I'm not going to be very polite about it, right? I want to share a very honest perspective. Okay? Because when I'm polite, that hasn't really helped students. Students need to understand exactly what this industry is really doing behind your back. So, before we start, in the chat section, it's open. You can send me, you can just write in the comment section, how long have you been trading? It would be really interesting to know how long you've been trading, and are you profitable yet? Or rather, what do you consider as being profitable, right? Is it a certain amount of P&L? Is it your personality's changing? Is it the many factors that you can consider, right? So just be honest, drop it in the chat. Okay, so before me I have a gold chart, right? I'm going to the 5-minute chart. Stay with me, guys. Now, from what we're seeing, okay, we've had this push down on the 5-minute, okay, and this looks like a very perfect scenario on the surface, right? Usually the time now is, let's see, it is about 8:20 New York time. Many of the retail traders are jumping in now. It doesn't matter whatever currency pair you're doing. Usually Forex retail traders like to jump in around this time. Okay, we get it. There's volatility, there's momentum coming in, and all that stuff. So when you get in right now, and you lose, you might consider that bad luck, right? You might consider, remember, a bad workman blames his tools. You're always considering maybe you have a bad broker, right? The broker that you're using is bad. Market manipulation. You could talk about spreads being too wide. You could also talk about the fact that news came out of nowhere, right? You go check out your calendar. Today we only had employment change for the New Zealand dollar, right? And there's nothing much. So you've done all that. And look, some of that is real, right? I'm not saying it's not real, but we understand all these games if you've been here for a while. You see, the Forex industry, especially trading financial instruments, might seem very easy from the outside. If you missed my video yesterday, we were breaking down something very similar. Now, we do understand that fundamentals, news particularly, will move markets very hard. We do understand that spreads do widen. I explained that, why they widen, and what are some of the precursors when you are going to start analyzing. So, here's what nobody wants to say to your face, all right? None of what you think about, or rather, none of that I just mentioned is why you're losing. That is a fact. That is a fact. None of that. None of that is why you're losing. I'm not sure. Can you guys hear me well? So none of that is why you are losing, right? The reason why you're losing in this industry is because of decisions that you are making. When I talk about decisions, I talk about decisions that are in real time, decisions that you keep making over and over. Maybe you've learned a strategy, but it's a bad strategy. And when you learned it, you were making some good positive results. And over time, you became very connected with your strategy, right? And unfortunately, you learned the bad way. So it's very hard to unlearn these things. So there's an element of habits, right? Having a habitual cycle of doing the wrong thing. All right. So there are many variations to what some of the things I'm going to talk about, but I'm going to walk you through the 5 biggest ones today, live on a chart while you can see, live in the market, not from a textbook, but from what I actually see from people who come to my community, what I've done myself in the past, and what really kills accounts faster than any news event ever could. So if any of this hit, please jump into the comment section, type what do you think is the main reason traders lose. Let's see your answers before I even give them. People following me on TikTok Live and Instagram, wherever you are, please join in. We'll be having these live sessions every day. All right, ladies and gentlemen, I want to go to lesson 1. So the reason number 1 is you're trading without a plan. You are trading without a plan, without a system, okay? If you open a chart like this and for some reason you start just making levels, right? Levels, you have some levels, some kind of levels everywhere. We have some structure being broken right here. Structure is being broken right there, right? Now, this is what most people's charts look like. Like before they even enter a trade. Nothing is drawn, no levels, there's no context, right? You are misinterpreting time frames. You're just opening a chart. You're seeing price move, and then you start to feel something, and then you start to click the buy button, right? It doesn't work like that. So, trading without a plan. I'd say that is not trading. If you're just using any kind of indicators, doesn't matter. Hi there, I'm the God. How are you? You're welcome. So, that is not trading, guys. You are gambling. If you're just using your intuition or your gut feeling to enter markets and do anything, you're just gambling. A plan is not complicated. I talk a lot about this. It's not complicated. It's just 4 things, right? Number one is, where is the trend? Where is the trend on the higher time frame? So open your higher time frames, right? Open it. Open your higher time frames, okay? Here we have a daily, or even rather a weekly, right? Where are we? Are we in an uptrend? Right? We're in an uptrend, whether you like it or not. We had a dip, but we are still on that same wave. We are in an uptrend. That is one. Then you go to the 1 hour. Understand where you are in the 1 hour, right? You could say that on the 1 hour, we are sort of bouncing back. We are kind of consolidating here, right? Fine, on the 1 hour. Move to the 15 minutes. What do you see on the 15 minute, right? What do you see on the 15 minute? So you're seeing some games happening here, right? Prices trying to break through this previous New York, right? We're getting out of it. Fine. So you're starting to get context, right? So you're asking, where are these levels? Where are these key prices likely to react from? Okay? That is what you have to have in your mind. You have to ask, what specific signal am I waiting for before I enter? Is it on the macro? Is it on the micro? Is it news? Is it some area where we tested yesterday? These are sort of the questions you have to ask, right? And then finally comes the biggest part. What is my risk? For that, you could go check out this martingale table that I've created. It's free. There are instructions for you. You have to have that R factor as well, which I call risk per pip. It's very easy. We work it out. We've talked about it, how to calculate it. Guys, this is very simple, but it's extremely hard. You know, it's like doing something consistently for the last 30 years, right? It's incredibly hard. Yes, for those of you asking where I am, okay, bye, great. Yeah, I'm on YouTube, so go check it out. Right? Now, if you can answer those questions, like how much am I losing if this trade is wrong? If you really can't genuinely answer those 4 questions before you enter, you don't have a trade. You have hope. You have what we call hopium. And hope is very expensive in the market, guys. All right? Now, let us try and understand this. Let us look at the difference between just entering the market without any plan and entering it with a plan, right? We've already identified a higher time frame here. We're going back slowly. We understand that there was some kind of pullback, but we are still in the long term going up. Go up to the 1 hour. We start to see some structure forming and things like that, right? And what am I waiting for, right? Am I waiting for a confirmation? Now we're just looking at technicals, right? Before we even get into the fundamentals, sentimentals, and all the other checklists that I have for my students. Go check it out. We look at the bond prices, we look at the yield curve. We're understanding what are other institutional participants like, how are they going to affect the market. So we're particularly trading. It's a Wednesday. What is the template for a Wednesday? Where is the potential into dealer range, right? We want to look for those premium prices. We want to look for those discount prices. We want to check out the equilibriums. And we want to sort of understand, put ourselves in a position of an institutional participant. So that is sort of the plan, right? But it's a step-by-step checklist that we will break down. Now that is just the baseline. And most losing traders skip everything I just mentioned. Okay? In the chat, guys, please hand on hat, right? I want you guys to be honest with yourselves. Do you have a written trading plan? The rules that you follow every single day. We could call that your Bible. You got a Bible? If you have a Bible, please jump into the comment section and be honest with yourself. In your Bible, what are some of the rules you have? All right, reason 2. Let's look at reason 2. Let us look at reason 2. You're ignoring news. Okay? Doesn't matter if we have a bank holiday, you're ignoring news. You are ignoring news. Okay? What do I mean by that, ladies and gentlemen? You see, news is not just a day thing. We had FOMC last week. All right? Are you reviewing your fundamental news? Are you going back to understand really what are the central banks thinking? Why are they not reducing the rates? You know, we've looked at all that. So I want you to go check it out. Go check out these websites. Go through go through some of these, go through the data we have from the US Bureau of Labor Statistics, right? Go check out some of that data, right? Go check out the inflation, charts for economic news releases. Look at employment change, right? Look at the latest stats, right? You want to look at some of these things here. We have top picks. You want to go check that out. See what's really happening, right? Look at total, by the way, we have non-farm payrolls coming up. So this is already a very good start. We have non-farm payrolls on Friday. So you want to go to these websites and understand, right? Let's retrieve the data. Let's check out what's happening. Understand your positioning from a macro level. Look, we have the year 2026 all the way till 2016. What is happening as we move forward? Now we're getting into some sort of predictive analysis, right? We want to understand this. For many of you, I simplify everything with these charts. Like I create everything, and all you got to do is sort of just understand the context, all right? So this is pretty much how we do it, but very, very calculated and very precise. All right. What else you want to go check out for? Look at the again from the same Bureau of Statistics. Look at producer price index news releases. Right. What's happening? Read through the data. Look, we have monthly and a 12-month percent changes in selected final demand price indexes. Right. You want to go through this data to understand what's happening with the food side. What is happening with energy prices, right? Right? Less foods and energy. Okay? There's a lot of this, and we will be breaking this down step by step. For if you're a beginner and you're just coming in, I just want you to have an idea of how these financial markets actually work, right? I keep coming back to this because I see accounts blow up, honestly, over this one mistake, right? You see the news, you trade the news, and that's it. You call yourself a scalper. What is the aftermath of these news, right? You see, traders sit down, they look at the charts. Charts are good. Setup is really, really attractive. I'll show you an example. We've looked at the gold chart. Many of you are seeing a double bottom, right? Whatever you want to call these things. Head and shoulders or whatever. It doesn't matter how you look at it, right? Some of you see this. This place was wiped out. It tapped in a, you know, you have some weird lingo for this. You call this an order block or whatever, resistance. And then you set your short position somewhere here. Fine. While timing the New York session, right? Momentum. I get it. You find a clear setup like that and you still lose and ask yourself, why am I losing? You put your stop loss at predefined areas. You have no concept, no idea of what the brokers are doing, right? And then your exit strategies are also bad. You know, there's a whole ball game to that we break down. So, slippage, your position is closed at pretty much the worst prices and you end up losing. Ladies and gentlemen, that is not bad luck and that is preventable. Like you can prevent all the mistakes you make to at least 80%, right? And that is your niche. Your niche is not in having the right strategy. It's in having a combination of a strategy, the psychology behind it, and everything else you need to be profitable. So I'll show you exactly how I use this, right? Let's see. I'm looking at, say, gold for now, for instance. You've marked your zones. you've marked all your zones, and what I just mentioned previously, you've done all your analysis, right? And only then after checking, and the timing as well, right? We have some windows, we have the 8:30 open, right? And this is pretty much where you would like to jump in, right? So depending again on the instrument, we'll break that down. Today I just want to cover generally some of the reasons. Now, let's go to reason number 3. Position sizing. Position sizing is a very big problem that we have with some of the students that I teach, right? You see, you don't notice it until it's too late. Position size. I've seen traders with very solid analysis, good setups, good direction, but they blow their account because their position size was so big that a normal, healthy, say 20 pip pullback wiped out 30% of their capital before the trade even moved in their direction. And you know the worst part is, once they lose, you have to sort of multiply your risk again. You have to be more aggressive to get it all back and then some profit. Now that cycle gets you back in the same spot. So the rule is very simple. You gotta risk 1 to 2% of your account per trade. I know everybody says this, but here's the most interesting part. You want to use a system for your risk. And I usually advise a proper risk compensation system, right? It could be anything. It could be a martingale used in a very strategic way, right? And you can calculate all that here. Okay? If you have, say, a certain amount of percentage, like let's say we have, for purposes of this, you're going to use, say, 1%, which is an equivalent to 1,300 bucks, right? You have, now when it comes to expirations, we'll talk a lot about that later on. Okay? 1 to 2, it means that you are, the mathematics behind it is you lose just $10 to $20, or depending on your account. If you say had $100, you'll be losing just a little portion while you learn. Depending on where you're coming from, if you're a beginner, you want to use much lower risk to learn. Okay? Because if you're using, say, 10% per trade, you need 3 losses in a row, and 3 losses in a row happens to every trader. If I show you my history, you'll be able to see that we have these losses as well, right? Even the best ones. You're down 30%, your account needs to gain about 43, I think it's, yeah. You need to gain 43%, right? 43% just to break even. So the math starts working against you before your analysis even gets a chance. So small size, you survive. Longevity, we're looking at longevity. Let the age play out over time, guys. The market will be here tomorrow, it was here today, it was there yesterday. So that's how you actually build an account. Risk management, and risk management also has a different perspective, right? We're looking at how you position your trades. Are you trading the same amount? Are you diversifying? How are you going aggressive on certain instruments? We will talk a lot about that, but risk management is also the reason why people are losing. So if you're a newbie here, even we have advanced people, or rather intermediate people that have been here for a while, and they still, mess up with risk management. So you gotta ask yourself a question. Do you see yourself 5 years from here doing the same thing? And it brings me to the next point. The next point is revenge trading, ladies and gentlemen. Revenge trading. Revenge trading. Again, I'll open this. We have a situation whereby you thought the market for some reason reached a high, right? You decided to sell. right? Within minutes, you sold, and then what happened? It kept going on. And then you keep selling, and it keeps going up. Same thing, you keep selling. You're revenge trading now, right? And then you're getting more aggressive. And then when you decide to buy now, you change your trading idea, and then it goes down. So revenge trading immediately after, say, a loss is one of the most, if not, it could be a beginner barrier. Okay? Getting into a revenge trade sequence is very, very, very bad, because you are going to learn all the bad habits and it will be very hard to get back. If you've taken a loss and you still keep going on, right, without thinking twice, you have no system in place, then you're going to get into a situation where you revenge trade. If the market takes your money, they took it very personally, right? You start to think the market is against you, or rather your book is against you. You sit on the screen trying to get it back. You're getting it back right now. You need it right now. You have no idea absolutely what you're doing. The entity that you're using, the institutions behind, you have no idea. And to be honest, they don't care about you. So, revenge trading is the simple, fastest way to turn a small loss into an account-ending loss. Why? Because you're no longer trading the chart. You're trading your emotions. You're not looking for setups anymore. You're looking for relief. And that market will not give you any relief. So here's what I do when I lose a trade. Take a deep breath, right? I close the platform. I get up, 5 minutes, I walk away. Go out for a run, do something, right? And then when I come back, I want to look at a fresh chart. Not from the, say, guys joining in from TikTok. You're welcome. Not from the perspective of someone who needs to recover something, but from the perspective of someone who just sat down for the first time today. It always has to have some fresh eyes. You have to get into the habit of washing off your face, like having fresh eyes. If there's no valid setup, I don't trade. I end the story. Now, the money that you save by not revenge trading will exceed the money you make from the most profitable trades or setups. Okay? Please, in the chat, drop something. Have you ever revenge traded before, and what was your experience like? We're all adults here, guys. Just drop a yes, a no. If you're struggling, go check out my community. Everything is in the pinned messages, and get started. We'll walk through this every day. Now, another reason why you're losing is you keep changing your system. Today, you're here with me. You got a new perspective. And I'm trying so hard to balance. I don't want to get into any advanced dynamic, right? Any architecture of any institutional architecture, rather, right? Yeah, you keep changing your system over and over and over. Today you're here, tomorrow you're there. It's you don't give it breathing time. You don't give it time to sort of test some of these ages, right? If you have any. Okay? You try a system, you take 5 trades, 2 of them are losing. You think, oh, the system is broken. You go on YouTube, you search for another guru. You come across them. You come across some new indicator, some weird indicator, and a new strategy, and a new guru with a new method of trading. And then you try that for a week. Same thing happens, and you're in the loop of constantly starting over. Never giving anything enough time to actually show you where it works or not. So, ladies and gentlemen, no system wins every trade. It is not there. Even the institutional side, we do hedge. We do find counter strategies to minimize and mitigate risk. So the best strategies in the world have losing trades built in, sometimes several in a row. The age only shows up, say, over 50, 100, 200 trades. If you quit after 5 because you had 2 losses, you will never, and I mean that guys, you will never know if your strategy actually works. So the takeaway is pick one, only one method, and then go with that. Learn, test it out. Right? One method which turns into a strategy. This strategy then eventually gets your age. So without any kind of consistency, you're just a tourist. I like to say that. You're just touring the financial markets. And it's not a place where you just come and play around, right? Because you are working with some of the smartest people in the world. Some of the smartest, fastest technology, right? So it's really, really competitive and you don't want to miss out on that. Okay, I want to talk about now just what I've already mentioned, right? I want to give you guys 5 rules. I want to give you 5 rules. Let's see. I want to give you 5 rules. They're very simple, but if you follow them, I'm just going to generalize, right? 5 rules on how you can stop losing. And the first one is a pre-session checklist. You need to have a pre-session checklist. You gotta ensure that you have it, right? Higher time frame trend, you've looked at that, right? We've already gone through that. Higher time frame trend, what's happening on the 15-minute, depending on your personality as well, all right? What is the trend? Step 2, you check the key levels. You're drawing them on the chart, all right? You're looking at high impact events right before you enter any trade, right? You're avoiding any windows of volatility, or rather you want to catch the momentum as it comes. Okay? Position sizing. Think about it like my account is X amount of, say, currency. And you have a limit every day. Say it's 2%. If it's 2% risk, it means that is my maximum loss per trade. And then you can break that down into fragments. You can get it into small fragments, right? Yeah. So pre-session checklist is very important. Okay. So all the steps that I've mentioned are very important. I'm going to take some questions here. If you guys are welcome. Yeah, those of you just joining. If you come across this video later on, okay, we have these discussions every day, and I help people tweak their strategies. I help people, give them a little bit of perspective, a little bit of guidance, and you don't want to miss that. Ladies and gentlemen, you're not losing because the market is against you. You're not losing because of your bad luck. Again, like I mentioned, you could blame your broker, you could blame manipulation, you could blame the market maker or whoever is sending you the quotes. You could blame your liquidity providers. But you're losing because just of 5 things. 5 things, I'm going to summarize them. No plan, you're ignoring the news. You have a wrong position size. You're revenge trading. And you're constantly changing your system. Just fix those 5 things, right? Fix them. And try it out for 1 month. Try it out for 1 month. Go and journal that right here. This is free. Come check it out. Get it. Fill that in every day diligently, religiously. Check it out. Right? And not all at once. One at a time. Start with a plan. Find a plan. Then go to the news. Then position size. then the discipline to walk away from any loss, then the patience to give one system enough time to prove itself. Do that. Do all 5 things that I've said consistently. And I promise you, I really, really promise you, from the bottom of my heart, that the results will change. They might not change overnight, but you are going to be in a better mental state. After one good week, after some more time, you'll start to see your results change. You'll become a better person in your daily life as well. So this is the work. This is what profitable trading actually looks like. There's a system, right? There's a system. Profitable trading is all about a system and discipline and the psychology to take you through all those barriers. All right? Ladies and gentlemen, a system is the most important thing that you need. It is the most important thing that you need. All right? Most important thing. So we're going into the New York session right now. And I'm going to have to now get some nice signals for you. So hopefully you're going to join in. And feel free to participate. Feel free to participate and ask questions, right? Subscribe if you want more of this. We do this every day. We're live every day. Different themes, same honesty, just learning and sharing. Come check out my live streams that I have across social medias. And in the chat, drop which of the 5 reasons hit the closest, right? Drop the number in the chat, I don't know, 1 to 5. Come and review this video again and learn to journal and bring your questions to the community. Thank you guys. Cheers.
We'll never trust, yeah. No, I don't wanna waste what's left.